Alrighty, everyone, welcome. This is Getting Started with Technical Analysis. Today we are going to talk about candlesticks and all things candlesticks. Just 1 second here. I have got, okay, sorry. I just had feedback coming in my ear and I couldn't leave that up for an entire hour. In any event, we're going to talk about all things candlesticks today. Um, And we're going to look at, when candlesticks might be giving us a sign that things are turning around. We're going to look at candlestick patterns, specifically at support levels and at resistance levels. And support levels and resistance levels, along with other trading patterns combined with candlesticks, can tell us a story. And so we're looking at how to interpret that story. And so that's what we're going to spend our 45 minutes on today. I've got Mr. James Boyd with us in the chat. He's a friend and a fellow coach, and has a great sense of humor. So if you see some smiley faces in the chat, you'll know why. If you're not following James on X, you're missing out, my friends. At James Boyd CS. You'll want to follow me on CS on X as well, at Barb Armstrong CS. And then we're now also on LinkedIn. So go over to LinkedIn and find us there as well. Okay. Just before we get started, know that this class is for general information purposes only and shouldn't be construed as, we're going to look at a lot of charts today, and nothing that we look at should be construed to be a recommendation or endorsement of any particular stock, chart pattern, or trading strategy. We are going to look at the Paper Money software application on the thinkorswim desktop platform. And this is a brilliant place to learn and to hone your trading skills, to make sure that you have a plan and understand your plan, and then understand the mechanics of how to place a trade on thinkorswim. There are some nuances and differences. One is that short options will never be assigned early. The other thing is that, if you have a stock that pays a dividend will not be paid in paper money. So there are some differences. Know that if we use a stop loss order, that isn't a guarantee that we'll get out at the price requested. If a stock gaps down, we may end up out at a significantly lower price. I teach this class in about a 9-week rotation, and then we'll add some additional classes to the rotation as well. Today, we're going to talk about candlesticks. And if you're seeing that, this is number 4 in the rotation, and if you haven't done the first 3 and you're new to all of this, not to worry. First of all, the first 3 are available in the archives, and there's a link in the chat to the archive, and there will be a link down below to those watching the recording. But I'm not assuming that you know a ton about technical analysis coming in. This is an introductory level class. So most of the coaches use candlesticks, and they use candlesticks the majority of the time. And why is that? It's because each candlestick tells its own individual story, and then when taken in the context of a general trend, it adds nuance to that story. And so when we look at a single candlestick, this rectangle is called the body, and it shows the relationship between the open and the close. And then these vertical lines are called the wick. And some people will call them a tail, and they indicate the high of the day and the low of the day. Now, when we look at a bullish candle, this body, the bottom of the body shows the open, and the top of the body shows the close. And typically this candle will be white or green, or it might be clear. And that's an indication that it opened lower, closed higher. And then the wicks show the high and the low of the day. When you have a down day, and we've got a lot of down days happening today, the open is higher, the close is lower, the high and low are still the same. And often this body will be black or red. And you can actually customize these and make them any color that you want. We talk a lot about support and resistance, and often a trend line, a 30, like something like a 30-day moving average or a 50-day or a 20-day can act as a support level or a resistance level. But candlesticks can act as support and resistance levels within themselves. And especially if you have a big day, this might happen at a support level where we have a big bullish candle, and the first support level is considered to be the midpoint of the body of the candle. The second support level would be where it opened that day. The third support level would be the bottom of that wick or the low of the day. And then, inversely, and this might happen at a resistance level, and this is, a candle that, opened higher, closed lower. The first resistance level might be considered to be that halfway point on the candle, the top of the candle, resistance level 2, and the top of the wick, resistance level 3. And we'll see this often being calculated if you have a big gap up or gap down, which can often occur, but isn't exclusive to occurring around earnings. And sometimes you'll say, well, gee, that's a really big candle. And how can you tell, if it's a really big candle? It's because it looks like a really big candle on your chart. There isn't something to say if it's more than this percentage, this makes it a big candle. But a large candle, if it's a bullish candle, so that would be a white candle or a green candle or a clear candle, indicates heavy buying. And when you have a big red candle or a big black candle, that indicates heavy selling. And so, and these large and small are relative. So if we come and we look at the SPX today, I would call that a large candle. We've only seen 2 candles this big in really since what? Since the end of March. So, and on March, we had a really big bullish candle, March 31st. Last Friday, we had a really big bearish candle. And then yesterday, we had a candle pattern here, which is called Harami, and we'll talk about that in a minute. But, it's kind of looking like we've got a fairly a big bearish candle today. And we've got a long wick, which at one point means that this candle was red all the way down to here. And now it looks like buyers are coming in and driving these prices back up a bit. Okay. So back to our charts for a minute. Yeah, and it's the same thing with large black candles, and or large red candles. And really you're looking at it in the context of the rest of the chart. So these are relative. But if you look at something and say, gee, that looks big, it looks big. It is big. And it's an indication of heavy selling, where these white candles were an indication of heavy buying. Now, where it gets interesting is when we look at candlestick reversal patterns. And I've got listed here 6 of the most common bullish patterns and then 6 of the most common bearish patterns. And you'll see as you compare one to the other, this hammer, it looks exactly the same in the bearish category. The difference is that this hammer, indicates that we have buyers and sellers, and the sellers drove the price back down, and then buyers came in, and by the end of the day, we had this small head on this pattern. And when it happens at a support level, that's considered to be bullish. An inverted hammer is just this taken upside down. And again, when this happens at a potential support level, considered to be bullish. Now with the hanging man, if you get this candle, either a hanging man or its inverse called the shooting star, this is indicating that the buyers and sellers, the buyers may be getting, a little tired, and the sellers may be coming in because, especially with this shooting star, it came in and the buyers drove the price all the way up to this resistance level, and then the sellers came in, and this could be people taking profits, or, if you have something that's been trading in a sideways range, they may have had a target for it just to get back to a previous resistance level, and then they're taking their profits. And the same with this hanging man. So where these patterns occur makes a difference, because this and this look the same, and these two look pretty similar too. So it's where they occur that matters. With a piercing line, when you're looking at a support level, you have a big down day, and then the following day, the stock or the index, whatever this is tracking, opens lower and then closes higher, and at least through the midpoint of the red candle occurring the day before. And that's considered to be a bullish pattern. Now, with dark cloud cover, it's the inverse. We have something that's been uptrending. You have a big bullish candle, and the next day it opens higher and then closes below the midpoint of that candle. So the storms may be coming in. Now, bullish engulfing and bearish engulfing, these patterns are created similarly, in that with the bullish engulfing, you have a down day or something that's come to a support level, and then the following day that candle opens below the body of this candle and closes above it. So the body of this candle engulfs the body of the day before. And with bearish engulfing, it's very similar, only it occurs at a resistance level. You have an up day, and then you have this big bearish candle where it opens above and then closes below. Okay. And I think that's pretty intuitive when we see it, that, it looks like this candle's been engulfed. Now, what about the harami pattern? Harami is apparently Japanese for pregnant. And so you're seeing, the mama candle and the baby candle inside it. And so we're seeing, at a support level, oops, at a support level, we have this, big red candle, and then we have this inside day. And this is considered to be a complete pattern in and of itself. Like, some might want to err on the side of caution and say, I'm just going to wait to see if it in fact continues to go up the next day. But this is considered a complete pattern, where when we look at a hammer or an inverted hammer, what we're looking for to place a trade here is a close or a trade above the high of the low day. And the same thing here. Okay. And then this morning star pattern is the only pattern we're talking about today that has 3 candlesticks, and it occurs at a support level where you've had a down day. The next day it gaps down and you have a bit of a doji pattern or a candle of indecision. And then the following day you get a big white candle that at least goes halfway through the body of this candle. The bigger this white candle coming out, the more bullish it is interpreted to be. And then the evening star is the opposite. It occurs close to a resistance level or at a resistance level, or it may establish a new resistance level, and that you have this big up day, a candle of indecision. This is called a doji, and then followed by a big down day, where this down day goes at least halfway through the body of the first candle in the pattern. Now, I have recorded short videos on all of these candle patterns, and you can find them in the Getting Started with Technical Analysis playlist. I've also created another playlist, and you'll want to subscribe to the Trader Talks channel from Schwab Coaching on YouTube. And what this does is, let me just bring that up. Trader Talks. So we're going to come to Trader Talks. from Schwab Coaching. And the first thing that will come up is what's currently being taught. And then if you come to playlists, I've created a folder called the Trade Management Mini Sessions. And if you come down here, there's a group of short videos. And it's, 13 of these patterns. And you'll see that pretty much all of these patterns are included, starting with what is a hammer, what is a hanging man, inverted hammer, shooting star. I go back bullish, bearish, bullish, bearish. And they're all, kind of 2 to 5 minutes long. So if you want to do some binge review on hanging mans, and on hammers and on all these candlestick patterns, that's an easy place to find them. Well, let's go out and look at some charts. And yesterday, when I was looking at this, I thought, well, this is going to be pretty easy because we were seeing Harami patterns everywhere. And when we look at the S&P 500, here's an example of a Harami pattern where we had a big down day on Friday, and then we had this inside day yesterday. Now, the reason that this particular candle is white is because this candle opened higher or opened low and closed higher, and also closed higher than the low of the day before. This candle is green, but is filled in because it opened higher and closed lower. And so when you see that happening, some traders might say, well, because I saw it open higher, even though this is a Harami pattern, I'm going to wait for confirmation in that. I'm going to wait to see if it does continue to bounce the next day. And in fact, it didn't. Now, if your chart candlesticks don't look like this, it's because you're using candle. So if you come to the sprocket and then come to appearance, you can see I'm using candle trend. So if I switch this to candle and hit apply and okay, you'll see that yesterday's candle is still a Harami pattern, but it shows up as red. And it's just personal preference. You can, either one will work, but especially if something gaps up and then sells off a bit and it closes up 15% on the day. Like you can see here, this is candle, and look at how this candle closed dramatically higher than the day before. When I go to candle trend, it makes that candle green. And that's just kind of the way I like to see it, but it's personal preference. And there are a lot of people that just use candle. Let's come and look at some individual stocks here. So let's look at Micron. So if we're looking at Micron, we can see, remember we talked about this hanging man pattern. So we had a big run up here, and then we had this hanging man. And with the hanging man, we want to see confirmation the next day. We want to see it close below the low of the high day. And in fact, it did. Now, this stock is up over 200% year to date. Does this mean all of a sudden it's a bearish stock? Not at all, but it might mean that it could pull back for a few days and be creating a bull flag. And in fact, then it came down here and, it did create a bull flag and continued to go up. And then we had another, just a few days ago, we had a new all-time high on this stock. And then we have this, hanging man. It pulled back for 2 days. Yesterday was quite bullish. And today, you might see this as a bearish engulfing pattern because it bounced on Monday, and then today we have this candle engulfing. But is it at a resistance level? So some might say no, because they're assuming that our resistance currently was established here. up here. And so it's kind of happening in the middle. It's not really happening at a support level. It's not really happening at a resistance level. And thus, all of a sudden, this 10-day moving average, which has been acting as support, starts to act as resistance. And so you might just say, the jury is still out on the candle pattern that I'm seeing today. But we can see how often, when we've come up that we've had these. Let me just change my drawing tool again. This doji type pattern, or, and then it did lead to a short-term pullback. Okay, so that's Micron. Let's look at Amgen. So with Amgen, this is a stock, it's still up almost 6% year to date. This is a 6-month chart, but since the end of February, it's been downtrending. But then we saw this big down day followed by a hammer type pattern. And then the next day we have this big bullish pattern. So this big bullish candle, and we call this a morning star pattern. And in fact, the next day it did continue to go up. Now, some might look at that and say, is this going to be establishing a new resistance level? Because it's may have taken a bit of energy to come through here, and might we see a pullback for a few days? And with this candle pattern, we're waiting for confirmation. And in fact, the next day we ended up with a candle that we'd call what? A shooting star. So we ended up with this shooting star. And again, this pattern also requires confirmation. And that confirmation is, do we have a close below, the low of the high day? And yesterday we did. And, and now today, this dark green says it opened higher, but it's been trading, it's currently trading lower than where it opened. And so it's kind of trying to find its base. But this is how someone might read this. And they might say, well, this could be setting up, and we don't have the final story yet on this, but this could be creating a bull flag pattern. But for that to happen, what are we looking for? We're looking for a close above the high of the low day. And we see that with these candles, and this would be our low day. And so we're looking for something to move back here to say, hey, this uptrend that has started, we're waiting to see if that's going to continue. Because we do have this, what we call a diagonal resistance breakout. It's been falling for a couple of months. And often stocks will kind of consolidate. Oh, let me bring that back up and clear that. Okay. So with this one, if you said, well, I wouldn't mind owning Amgen, it wasn't long ago. It's currently trading at 346. It was trading at 391 back at the, beginning of March. But I'd only want to buy it if it trades above this 352.17, the high of this low day. So you could put a conditional order in if that was the case. Okay. Okay, let's look at another one. Let's look at Comcast. So with Comcast, here's a pattern, and I'm just trying to point out patterns. I like to do them, very currently if I can. But, if we look at this, what would we call this? This is a bearish engulfing pattern, because we had this, pretty extraordinary run to the upside, where it came up almost 20%, 19% in, 10 trading days. And then we have this bearish engulfing pattern where the body of this candle totally engulfs the body of the previous candle. And so one might have looked at that and said, well, I'm not surprised. I'm expecting it may be setting up a bull flag. Now, in fact, Comcast started rolling down the hill. And we're now at a place where we're now seeing this bullish Harami pattern, but it's within the context of this recent downtrend that really started in February. And so now one might look at this and say, well, this might be setting up a bear flag. And we'd have confirmation of that, if we saw a close below the low of this high day. Because this, is saying, hey, this may be turning around. No telling how long it'll turn around for. And then we've got two candles of indecisions. And this may be indicating this is as high as it's going to go. And it may start to continue, downtrending again. But with these candle patterns, we're looking for a confirmation. And that confirmation is a close below the low of the high day if we're expecting a bearish trend to continue. Okay. I'm just going to have a quick look at the notes, the chat, to just see if there are some questions here. So it's, I haven't been listening to a lot today on somebody saying, what's the reason for the sell-off today? It could just be profit taking. Because when we look at the NASDAQ or we look at the tech sector, this has been a bit of a melt up, if you will. This has been a 35% move to the upside on this index in 45 days. And when we look at the SPX, the S&P 500, again, a 20% move to the upside. And the tech sector, if we come and we look at tech, which is typically pretty similar to the NASDAQ, that's almost a 48% move to the upside. And so when people start seeing these sell-offs, they might say, hey, I'm up 50% since this low here at the end of March. I think I'm going to ring the bell and turn my unrealized gain into a realized gain. And so there could well be some profit taking happening. And that could be the reason for the sell-off. So Charles is saying, would you be able to make any prediction on the next day based on these patterns? That's really the purpose of these patterns, Charles, is to look at these patterns and then have a degree of confidence in what our expectation is of what's about to happen. And sometimes the charts don't give you a lot to trade on. And that's okay, because on those days you can just say, you know what, I'm going to sit here today and wait. Because yesterday, so if we're looking at Marvell and we're talking about size of candles, like little candle, little candle, little candle, little, 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 big, 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 big. So yeah, Josh is saying, there's pretty strange price action across the board. But, if I had looked at this yesterday, and I may well have, I would have said, well, if I'm playing I Spy with my little eye, I'm seeing this big, um, bull flag pattern, right? And then I'm seeing this Harami pattern happening where I have an inside day. Now, as it turns out, as the day closed, this ended up being an inverted hammer or a doji pattern at a potential support level. So we can see these pullbacks and new support levels being formed a more cautious trader might have said, yes, I see the harami, which is meant, it's a complete pattern. Now, is there any guarantee with a pattern that, you can take to the bank and say, for sure, this is going to go up tomorrow? Those don't exist, sadly. Sadly. But what we had happen was this doji pattern. And so a conservative trader, or a more cautious trader might have said, well, I see this harami, which says I can place a bullish trade, but I'm going to wait and just wait for confirmation on this candlestick pattern that it goes up. And had you done that, you'd be patting yourself on the back, because today is, not the day that many traders were expecting. Okay. So it's kind of thrown a wrench into things for a lot of people. So, this wasn't necessarily expected. So how about Marvell? I've got Marvell up. Let's look at Cisco. Now, Cisco, we had this, big up day here. Then we had a harami pattern, right? Some might have said, well, you see bearish harami with these two candlesticks. I see inverted hammer. I'm going to wait. Oh, this is CSCI. I meant to type in Cisco. But, we can still look at these trends with these patterns. And had you waited, you would have had a bearish entry on this day. And had you placed that trade, it might have been successful. Now, these are kind of unusual looking candles. So when I look at that, I'd want to come and see. There's not much data on this. So I wonder if it's very heavily traded. Oh, yeah, it's not heavily traded at all. And it's $2.72. So yeah, we're going to move on from that one. CSCO. So when we look at Cisco, which is where I was intending to go, get rid of some of these lines, which are, no longer relevant down here. But, yesterday we had this harami pattern. We had this bullish harami at a potential support level. And there are traders that might have placed a trade based on that, and because the tech sector has been very strong. And then today, it's down again. And so does this mean that the trend on Cisco has reversed? This is a stock that's up 55% year to date. And you might say, well, no, why not? Well, I see a potential support level. It hung out here for, 5 or 6 trading days. And if it breaks below that, and it came down and it kissed, and remember, support and resistance are not finite numbers. They're ranges. And if it breaks through that, then a next support level would be considered to be here. If it breaks through that, this would probably be considered to be the next support level. But so far, like the wick on this candle is saying, okay, it's coming down and testing this support level. Buyers appear to have come in when it's come down this far. This is still a live candle, so we don't know where it will be by the end of the day. So if somebody's asking what the solid green candle means. So this candle means that on this day, like I'm hovering over this candle here on May 14th. So this candle, it opened at 117 and it closed at 115. So it closed lower than where it opened, but it still closed a whole lot higher than the 101 where it closed the day before. And this is an earnings gap. Now, if you're using regular trend, this candle would be red because it closed lower than where it opened. But it's still, it was still a big move to the upside. Like if we were to measure that move, it was still about a 13% move to the upside. So I think it deserves to be a green candle, but that's just me. Yeah, that's what that means. So the next day, this candle's white. And what does that mean? Well, and it has a green, um, uh, it's green around. And that, so what that means is it opened lower, closed higher, and closed higher than where it closed the day before. Where with this one, this body it's clear inside the body, but the outline is red. And that means that it opened. So this one closed higher than where it opened. It opened at 126.16. It closed at 126.50. So it closed just a smidge higher, but it still closed lower than the day before. So that's what that means. Yeah, yesterday was like officially Harami Day. It was sponsored by, the Harami Association because we saw a lot of Haramis. And so yesterday we had a Harami Day here, and this stock has been uptrending. Today we're seeing, Cisco get hit with the same type of sell-off. Yeah, that everything else is. Oh, yeah, some people have said the sell-off is people taking profits so they can buy when SpaceX IPOs. I can't comment on that, but there's been a lot of chitter chatter about that, right? So somebody's saying, what would be the prediction on a pattern that has a large candle and low volume? So the higher the volume, the more impetus between the direction. Okay. Yeah, and somebody's saying like, wow, I didn't realize there were so many stories. There were so many stories with a candle. And is a shooting star worse than a hanging man? So here's a hanging man, potentially. This is more shooting star like. And I think what the hanging man tells me is, you know, people came in, it opened, the sellers tried to get control. The buyer said, not on my watch, and it finished close to where it opened. Here, with this one, and it could have opened higher. Do you know what I mean? Like this candle could be happening up here. Um, but it opened lower, buyers took it up and sellers took it back down. So that it closed. It said, like, you want to drive that price up? I don't think so. So, I think it just shows us I think it's about the same. That's my interpretation, but I'm not a candlestick expert. Um, yeah. James was just in Hawaii last week. I don't know how they say flag in Hawaii. Yeah. Um, yeah, somebody's asking if this webinar is repeated every week. So this is a weekly class, and we're going to talk about a different topic on technical analysis, and then we'll go back and we'll start the rotation over again. But different things can be happening in the market each, as we cover the same topic, 3 months later. Um, so it can skew our conversation. Okay. Okay, so that was Cisco. Let's look at UNH. So UNH is one of the few today that I see, having a potential entry in that we had this kind of consolidation pattern happening. When we come out, it came down. It came up to a previous high. So this was a resistance level. It broke out, came back to retest, which is not uncommon. And then, we saw this candle here. And when we really zone in here, if you're saying, well, here was a previous high, often it gets tough to break through those resistance level. Think of it as this is a ceiling, and is it going to become a new floor? And so this candle pattern here, this shooting star is saying, don't know if we're going to make it through. But a shooting star requires what? It requires confirmation. So this oh, sorry. This appeared to be a shooting star. And it appeared to be a shooting star. Why? Well, because it was at a previous resistance level. And then we ended up with this bullish engulfing pattern yesterday, and then it continued on. And you know, when we look at the healthcare sector, so here are the sectors. Does this look somewhat similar, what's been going on with UNH, to what's been happening in the sector? It's kind of uncanny, isn't it? So there's UNH. So period of consolidation and then breaking out. So if we wanted to add this to our example portfolio, um, you know, where might we put a stop? We might say, well, if our belief is that this is going to continue to move to the upside, if it comes back below this support level around 402, it's not going in the direction we were expecting. So we could take that 402 and say if it goes 3% below that, we'd like to exit the position. And so we could put a stop in. Now, just because we have a stop doesn't mean it's a guarantee. But if we wanted to add this to our portfolio, we could come in here and say we want to buy custom with a stop. And if our max position size, let's just say it's around 25,000, we can take our calculator and say, well, we can't afford to buy 100 shares, but we could at $412 a share, you know, we could buy 60. And so I'm going to say, okay, we'll buy 60 shares. I'm going to turn my firecracker into a paperclip. And then when I click anywhere on these two lines, it will even up the quantities. And I'm going to make my stop 389.94. Oh, that's a comma. Okay. So what I encourage you to do, if we're just putting this in our growth stock group, what I encourage you to do is go and bring up some charts. So bring up a JP Morgan or, you know, whatever stock you would like to look at, and then start looking at these candlestick patterns, especially at resistance levels where it's hitting a high. So when we look at this one at JP Morgan, it came up, and what do we call this? We call it piercing line if it's happening at a support level. At resistance, we call this dark cloud cover because it looks like the storms are coming in and this uptrend, you know, may be coming to a close. For how long, we don't know. And in fact, it did pull back. And then we have this bullish engulfing pattern. And then, you know, this harami and then harami again. So we're having like stacking haramis happening here. And then it did move to the upside. And so these patterns are they're certainly worth examining. So as we wrap, I'd just like to encourage you, hit like if you found this content helpful. Subscribe to the channel if you haven't done that already, to Trader Talks from Schwab Coaching on YouTube. Check out some of those short videos on candlesticks. There is also a survey in the chat today, and that survey has just two questions. One was, I hated it. The other, I loved it, and I'm going to keep coming back. And so if you'll fill that out, you also have the ability to put in comments. So if there are topics you'd like to see me cover in upcoming webcasts, don't hesitate to put that into the comments. I promise if you fill it out that I'll read each and every comment, and so will the leadership team. And so that's a wrap for today. I want to thank James Boyd for hanging with me in the chat. I want to thank the guys behind the scenes who helped bring this to life. And I want to thank each and every one of you who showed up today, both the usual suspects and those that are here for the very first time. This will be available in the archives. So stay tuned. Up next is Swing Trading with Mike Fairborn. Have a really great rest of your day, and I'll see you in a webcast coming up soon. Take care, everyone. Bye for now.